Welcome, everybody, to Secret Sauce, the show where we unpack business tips, life hacks, and advice from industry leaders. Today, I am joined by a very special guest to talk about the New York residential market. Welcome, Kirsten Jordan. How are you today? So nice to have you.
Thank you so much for having me. It's so great to see you.
Great to see you again as well. For our listeners who maybe don't know Kirsten, she is the star, the main star, in my opinion, of $1 Million Listing New York, and also a top producer at Douglas Elliman. So when it comes to authorities on New York residential real estate, she is my go-to. So without further ado, Kirsten, why don't you tell us a bit about what's been happening in the last year? It has not been a dull year for residential real estate. So give us a quick update on New York and the state of the market.
What's crazy about the New York City real estate market, because as you know, like I am localized, you know, I do New York City, I do work in the 5 boroughs. Most of my business is Manhattan, Brooklyn, and Queens. I am up in Westchester here and there, but really I do stick around New York. And what's been amazing is, and I love this idea, everybody is basing life on 2021. They're like, well, whatever happened since or before 2021, 2021 is our new benchmark for reality. And that's not really true. 2021 was a year that we don't fully understand why or what happened, especially in residential, as to what the frenzy was. I know clearly there was a perfect storm of demand, of change, of people having, I don't know, like YOLO to be able to get out and be in the world and buy and have free money, right? Whereas now what we're seeing, and honestly, the first quarter was still pretty strong. It was really going into the second quarter that we started to see a slowdown in activity. However, if you look at the actual numbers, it's really more of a normalization, a seasonality, a baseline that's really pretty stable. The other piece of the residential market is that the assets are not apples to apples, as you know. There's a lot of there's a new subclass of real estate assets that are residential that are really, really high-end condos that are located in top neighborhoods that have made a new market for themselves and continue to make a new market for themselves, independent of everything that's going on in the rest of the market. So we have 220 Central Park South, you know, and that sold, that was a couple of years ago that building sold, and those were, you know, $8,000, $10,000 a square foot. And now you have, for example, the Park Lane, where everybody's talking about that being $15,000 a square foot, which you say, oh my God, how is that possible? And New York City real estate's incredible. You know, they just listed the penthouse at Central Park Towers for $250 million. And everybody's feeling confident about doing a bunch of trades in these billionaire row buildings. And then you start looking at the co-ops that need renovation on 2nd Avenue and 85th Street or 83rd Street. And those are having a lot harder time. And in those areas, you don't even know if appreciation happened or if it's actually depreciation, because technically, if your money's worth less and the home is worth what you paid for it 10 years ago because you haven't done any renovation to it or touched it, then where is the market? So we have a very, very localized market here that's hyper localized to specific buildings where there's really, really high demand, specific submarkets of condos versus co-ops, single family versus multifamily, and very, very neighborhood specific. So that's a long-winded answer to what's going on in our market, which is it's not 2021. It is very much 2022. And there are some assets that are in a free fall of pricing discovery where you're waiting to get offers, dropping prices low enough to see where the new demand is going to come in and when we're going to start to see offers. And then A+ blue chip assets that are still trading for crazy prices.
So I feel like we could have this discussion neighborhood by neighborhood, but I am not as plugged into the New York market as you are. So that would be a short conversation from my end. So let's look at a few more macro factors.
Yes.
Now, population shifts. We had this huge storyline of everybody leaving New York, going to Florida, going to the Sun Belt. I feel like that's probably stopped and stabilized. Are you seeing an inflow back in? And do you think we're back to pre-pandemic levels? What's the population shift feel like to you overall?
The population shift feels that the people coming into New York are mostly young people. Those are the ones that are excited about being in New York City. They want to meet people. They want to be part of that community. There's also the diehard New Yorkers, which are the people who, instead of leaving New York City, they dug in, they bought their forever home during, the depths of 2020 when there were deals. And then there are the people who want to have a piece of New York City. And those people are usually the ones buying some of these trophy assets that are the ones that we discussed that are really the blue chip assets, because these are the most intelligent, probably sophisticated buyers that we have. And so those, that's where the demand is. As far as where the flow is going, there's still, you can't deny the sand states and the tax implications of that. There are plenty of people who have decided that they're no longer going to make their residency in New York City. And the truth is at some point, if New York can't turn around the way that the city feels right now, there are going to be more and more people who are going to do that. That's just the way that it is. Why would you pay up in taxes to then have your city not feel safe and have it not be clean? And that's one of the other reasons why there's really, really specific pockets of what's doing the best as far as residential real estate is concerned. It's because it's the areas that people walk out and they feel good about where they are.
How does this impact the boroughs? When we've been talking about New York, I think of Manhattan. Obviously, there's many other markets in the boroughs. So are you seeing more people shift from Manhattan to the outer boroughs, or are they not? Or is it all kind of, again, even more micro than just Manhattan versus Brooklyn?
What's funny is that it is still, there's a lot of the Brooklyn is really the biggest, the heaviest hitter. And the place that made out the best is Brooklyn during this time period, because people say, listen, I don't want to leave the city. I don't want to leave a city. However, I don't want to be in Manhattan anymore. And honestly, a lot of Brooklyn's extremely well run. I don't know what it is, but whenever I'm in Brooklyn, I park my car and I get a parking ticket immediately. I park it up on the Upper West Side and I can leave it for a couple of days and nothing happens. And that's kind of indicative of what's going on right now. And the other part of Brooklyn is that it has maintained this kind of more residential vibe while still being a city. And it's a place that people had already been maybe thinking about or maybe ventured there because of restaurants or because of other cultural activities. So it was an easier jump. Whereas when you start looking at Queens, or you start looking at the Bronx, or you start looking at some of those other boroughs, that doesn't necessarily have the character, for better or for worse. I am doing a ton of business in Long Island City, which I do believe is kind of the last frontier when it comes to value. I sold the most expensive condominium in Long Island City last year, and or maybe it was the beginning of this year, but it was, and that's because it was views of Manhattan, big apartment, less than 2,000 a foot, full service building, parking. Where can you get that? Huge terraces. Exactly. So there's some value there, and Long Island City is actually super close to the city. It's easier to get to than Brooklyn.
Makes sense. So maybe there's value there that is yet to be uncovered.
Exactly.
Talk to me for a minute about the rental market. We're hearing rents are going up. It's becoming prohibitive for some renters. Is there still incredible demand from a renter perspective?
The rental perspective is going to be interesting. What's going to happen is that the sellers who overprice their homes and are not ready to take what the market will bear for the next couple of years are probably going to re-enter the rental market, which is probably going to offset some of the high-end rental values that we were seeing. If you think about it, it makes sense. I can't get my $50 million. Maybe I'll put it on for $100,000 a month or $150,000 a month. If I get $90,000 a month, maybe that'll work. Or the same goes for the lower price points. I can't get $5 million. I can't get $6 million. I'll put it on for $20,000 or $25,000 a month. And so that is something that I think we'll probably see correct quicker, because now the headlines are scary enough. More and more sellers are calling and asking, what's going on? What should I do? And it does involve a pricing conversation. If they're not positioned well by price and everything else is working, then it is a pricing conversation. And so I think that's what we're going to see. As far as the lower end of the rental market, I think it's only going to be the super luxury rentals that don't make much sense, like the small 2-bedroom that's $7,000 a month on the Upper East Side. That's probably going to get a little softer because it's not a family apartment, for better or for worse. It doesn't make much. Whereas those family homes are still always going to be the place where it's hard to find a deal. It's hard to find the space for the money. And that's just going to stay status quo. It's this, when you start to get above $20,000 a month, 20 to 30,000, that's where I think we're going to start to see a little bit more inventory come on. But the But the regular guy who's renting, I don't know if they're going to get any relief anytime soon.
Are you seeing a lot of clients buy one-off units to rent out? Is this a thesis that's working now? And I love when you say the lower end of the market, $7,000 to $10,000 a month. I mean, for everyone listening who's not in New York, they're probably going, I'm sorry,
but
like, come again, right?
And
you're like,
they're like, why don't I buy
a month? Yeah,
I should buy New York City because I could just get this crazy yield.
Absolutely insane. But
yeah, the yields. Listen, the yields in Manhattan for just starting with singular condo apartments are usually, 3 to 4% on a good day. That's on a good day. The luxury purchases, they're more like 1 to 2% because of the fact that the carrying costs are higher, the purchase price is higher per square foot, and therefore the rents just can't keep up from a yield perspective. So that's so the only way to get a really, really high yield on singular apartments is to have very low carrying costs, which usually means a no service building, or there being some other one-off that makes it a very, very high rent versus low carry, because that's the only way to really, truly arrive at those numbers. And then as far as multifamily is concerned, the yield is maybe a little bit higher, but your carrying costs or your headache value is more because those are more expensive for entry. Usually it involves a CapEx in order to be able to make sure that you're going to get more money. And that gets into this area of how much headache do I want to take on as a landlord? And then you need somebody managing it. You need to deal with multiple different, there's much more diversification, but there's much more headache. And then of course, you run the risk in Manhattan of rent stabilization that's lurking around the corner that you don't know if your building's fully destabilized and stuff like that.
Right. That is a huge challenge right now for investors. From what
Yes.
I'm hearing. Are you seeing clients shift their approach on getting mortgages? Have they gone to shorter terms? Are they going to more adjustable rate mortgages? Any change in the way they're financing deals as rates skyrocket?
Well, first of all, private banking for our wealthiest, sellers and buyers, because remember, sellers rates are as big of a problem as buyers rates because the sellers have good rates. And so why are they going to leave if they're going to get bad rates? Exactly. And so, or worse rates or not as attractive rates, because let's be clear, the rates we have right now, they're not bad in the scheme of the last 40 years, but the issue is that they're not good in relation to what our memory can handle.
Right.
So the issue is sellers at some point will say, if I can't get into something that is within where I am, what I'm paying right now, I'll hold on to my 2% interest rate or my 2.5% interest rate. As far as private lending and alternative lending options, we're seeing people take a look at everything. It's not really taking much off of things in some cases. However, private banking relationships help. People are getting other kinds of private mortgages or private loans, or looking at things like interest only, other ways of structuring the debt so that they don't feel like their monthly costs are out of control and they can still afford to own. Love
it. Okay, I want to move on because I know we don't have a lot of time today. Mm-hmm. So personally, aside from everything you do in the real estate world, which is tremendous, you're also a well-known celebrity and a mom of 3, I believe. So you have more on your plate than basically anyone that I know. And I thought I was busy, but I think you trump my level of business with a multiplier. So how do you juggle everything that you're handling and keep yourself healthy, keep yourself on track? Any sort of personal advice or life hacks that you'd like to share?
I really believe in health and nutrition and sleep and exercise. And I know those are all really cliched things. However, I have found that supplement regime, and I do believe in Chinese herbs and Chinese medicine and acupuncture together. I do that. I've been doing that once a week for almost 10 years. And I'm finding that in combination with making sure that I keep up a really good regime of weight training is very, very important. And I think that, the rest of cardio is clearly, you can take it or leave it. But as we get older, as women, as you know, it's really, really important to maintain muscle. And the only way to do that is weight training. It has to do with osteoporosis. It has to do with there's a lot of other hormonal pieces of having good muscle tone that is really, really important. And then I work with a woman named Christina Burns. Her group is called Naturna. And I have my Chinese herbs upstairs I'm going to be taking. And I swear I have a leg up on other people because of the fact that I live such a clean lifestyle.
Love it. I'm going to check it out. Thank you for that tip. Very, very helpful. And I'll get back to the gym. Thanks for pushing that. No, all good advice. This was a really fascinating update on the New York market. I'm so glad you could spend some time with us today. And to anyone listening, if you have questions on New York real estate, if you're looking to buy or sell, obviously Kirsten is a fantastic resource along with the rest of her team. We'll make sure you know how to find her team should you have any follow-up questions. Thank you so much for joining us. It's wonderful to see you again. To everyone listening, that was Secret Sauce. We're happy you could be here, and we hope to see you again very soon. Take care.